it's time to talk about what the 2021 index is telling us about Silicon Valley. Well, the thing about 2021 and about the year that we've just experienced is that the main story is COVID. It suffuses every page of the index. It has, of course, influenced every aspect of our lives. And so we will begin the 2021 briefing by doing something we've never done before, which is we're going to talk about the actual toll in terms of human lives that this disease has taken. So let's start with deaths. I just want to point out that here's the actual number: 2,188 of our brothers, sisters, mothers, fathers, aunts, uncles, our friends, our dear friends. We have lost 2,188 of them to this dreaded disease. I want you to remember something, however. When this all began, we were told that 50% of the population would contract the disease, and that 4% of those would die from the disease. And we took those projections very seriously. That meant that in the Bay Area, we were bracing for 160,000 deaths. That clearly didn't happen. The number instead is 2,000. And one reason that didn't happen is because the Bay Area was serious. We were aggressive, and we had strident leaders who moved immediately to lock down the region and to shut down the economy. And these were controversial decisions, but they did in fact flatten the curve. And so I think this region owes a great debt to people like Dr. Cody, who, by the way, we will be hearing from tomorrow in the conference. She will give us an up-to-date briefing on the disease and the rollout of the vaccination. At any rate, that is the actual toll on our region, and that would be 2,188 deaths. If you're interested to know, it has become the sixth leading cause of death in Silicon Valley. The top cause of death would be cancer, followed by heart disease, followed by stroke, accidents, but there is COVID-19 now, the sixth leading cause of death. The daily case count has gone up and down. We did a very good job of flattening the curve, and then, of course, we had huge spikes. Interestingly, those spikes tend to correspond with holidays, when we loosened our we loosened our own commitment to be distancing, and so it very clearly corresponds with the spikes. It looks like our cumulative total of cases has been about 144,000 over this 11, close to 12-month period. 144,000 cases. Now, we always have to put those numbers in context, and so I'd like to translate that into a percentage. That means that about 5% of Silicon Valley's population has contracted the virus, 5%. How do we compare to other places? Well, California's rate is 9%. The United States is 8%. So that puts it in context for you. Silicon Valley faring better than the nation and the state overall. You might be curious about the world statistics. Only 1% of the world's population has contracted the disease. If you contract the disease in Silicon Valley, you have a 98.6 chance of surviving. And that actually varies by age. Here's a chart that actually lists that out for you. And it does, in fact, correspond to your age. So if you are in your elderly years, you have a lower chance of surviving the virus. In fact, people in their 80s only have a 79% chance, whereas if you are less than 50, you have about a 99% chance of surviving that disease. This shows it to you another way. This is showing you that more than 50% of the cases are accounted for by young people, people who are less than 50 years old. And yet, the other pie chart is showing you that more than 50% of the deaths are being suffered by people who are in their elderly years. These charts break it down, and in the index, we break that down for you actually very carefully. But let me move quickly to the question of vaccinations. We'll hear more about this from Dr. Cody. But our population is now about 15% of the way along. 15% of our population has been vaccinated for the disease, and that would be both rounds of the vaccination. And there's more to come. Let's talk about what the disease has done to Silicon Valley, to our economy, and to our ecosystem. I don't need to tell you what you already know. It's been devastating. It's been uprooting. But I do want to put this into context. This is a picture of the State of the Valley Conference last year. Imagine that. Look at that. We're sitting together. It's hard to imagine. But last year, I stood on that stage and I told you that we were looking at the hottest economy that our region had ever experienced in historical terms. In fact, this is the chart that I showed you. This is a chart showing that Silicon Valley's economy had just experienced 9 consecutive years of expansion. And that was a longer run than we had ever experienced in our history, longer than the crazy semiconductor days of the 80s, longer than the dot-com boom. This is the longest continuous expansion that we had ever experienced. And by the way, we spent most of our time talking about 2 major issues. One was the effect of growth on our region and how we can cope with that kind of growth. And then the other was the black eye that our region was taking in the press because of issues related to tech. We referred to it as techlash, and this notion that something was wrong with Silicon Valley's tech companies. I want to just pause here and note that those kinds of criticisms, however valid, have been muted since the onset of the pandemic. And small wonder, because I simply want to observe for all of us that Silicon Valley and Silicon Valley's companies have been absolutely central to the nation and to the world in terms of our ability to cope with this tragedy. Think about it. Today, we are able to communicate because of the miracles of video conferencing by companies like Zoom and others that are Silicon Valley companies. We are maintaining our sanity because we're able to watch Netflix and stream on Amazon Prime, and those are Silicon Valley companies. We are using devices that are created by Silicon Valley companies. Those devices are making use of microchips and and microprocessors that are Silicon Valley companies. But it's not limited to that. The goods and the services that are being delivered to our doors were brought to pass by Silicon Valley companies. And then on the forefront of the disease itself, these have been Silicon Valley companies on the forefront when it comes to mapping out the genome, doing the large-scale computational processing, and then a host of startup companies coming out of Stanford and the UCSF ecosystems that have been on the very forefront of identifying those genomes, mapping them, and then contributing to the vaccination. So Silicon Valley stands at the center of our nation's ability to cope with this crisis, and we need to be mindful of that. Nevertheless, there has been quite a shock to our system, and I'm going to try and detail it for you today. Here's the same chart that I just showed you. This shows that we had this continuous expansion. However, COVID hits, and look what happens. Right off the bat, we lost in the Bay Area about 450,000 jobs. And then over a 3-month and then a 6-month period, we started gaining back some of those jobs as we learned how to proceed with distancing and with proper protocols. And so by the summertime, we had actually gained back about 214,000 of those jobs. We lost 445, gained back 214. So in the Bay Area, we are down right now by about 232,000 jobs. In Silicon Valley, precisely, if I can just be more precise, we lost 151,000 jobs right off the bat. We gained back 90,000 of them, and we're still down 61,000 jobs. Guess what the jobs are? You already know. I don't have to tell you. It turns out that the pandemic bifurcated us. It created two economies. One of the economies is the kind of things that you can do when you're in front of a computer or you're able to video conference. And people that were able to do that were able to continue on, and those sectors of the economy did not experience the job losses. Then we have another segment of the economy, and I'm characterizing that as the in-person economy. That's where you actually have to be interacting. Those jobs, those kinds of jobs are where we experience enormous losses. And here's a chart that's laying it out for you. It's no surprise what they are. It's retail, it's salons, it's dry cleaners, it's personal services, it's the hotel industry, it's accommodations, it's restaurants, and it's actually the travel industry, including especially transit. So all of those jobs were decimated in Silicon Valley, again, to the tune of about 150,000, sum total, that we lost. By the way, this is a chart that's showing you how we characterize all of the jobs in Silicon Valley in terms of their level of payment. So we have what we call 3 tiers of jobs. Tier 1 would be our most highly compensated jobs, and tier 2 would be in the middle, and then tier 3 would be the jobs where they are receiving lower levels of compensation. So the brutality of this disease is that those tier 3 jobs are low skill, low wage jobs where we had the devastation. So the people who could least afford to lose their jobs are in fact the people who lost their jobs. That's what's happening throughout our economy. Here's your unemployment picture. Last year at State of the Valley, we said that Silicon Valley was essentially at zero unemployment. It was 1.92%, but economists call that the equivalent of full employment. Well, then it just skyrocketed up. Within weeks, we had hit 12% unemployment. That is a record for our region. We have never seen numbers that high in our entire history. We have been able to gain back, and so today, as of last Friday, in fact, our unemployment stands at about 5.9%. But remember, that will correspond and track perfectly with the opening of the economy. So to the extent that we can gather, we will see those jobs recover. To the extent that we can't, they will not. This is showing you how it compares with the state and the nation, and we're faring better than the state and the nation, and that's because it's possible for so many people in Silicon Valley to continue working from home. We have the highest percentages that are working from home. 60% of our workforce was able to work from home. The national average, you might be curious to know, is 38%. Here's a chart that may be of interest. Under normal times, about half of our jobs are in what we call community infrastructure, all of the jobs that I just described, retail and so forth. And then about a quarter of our jobs are in tech. And by tech, we mean tech very specifically. These are programmers, coders, people that are making electrons dance. So that's how our pie looked, but our pie has changed significantly since the onset of the pandemic. We have lost fully 4 percentage points in that community infrastructure category, and they were picked up in the tech sector. Our tech sector actually grew since the onset of the pandemic. And we'll say a bit more about that in a few minutes. I want to talk about income inequality because this has become a distinguishing feature of our region, and it has become more highly pronounced as a result of the pandemic. Let's take the long-term perspective on this. For years running, Silicon Valley was actually a highly evenly distributed economy. We were characterized by middle-range jobs. That was what Silicon Valley was proliferating. That story began to change in the 90s. It accelerated after the epic recession, 2010, when the economy recovered, and we started inventing industries, products, services that required highly skilled people, that introduced bidding wars for talent, and suddenly we had a workforce that was heavily weighted by people at the top. those highly skilled people. And so that's when we started to see income inequality like we had never seen before. Meanwhile, the people in our service sectors, we have witnessed their wages stagnating over now a period of 2 decades. Now, there are many ways to measure income inequality, and we present several of them in the index: relative economy, absolute inequality. But the most common measure is the Gini coefficient, and so that's what you see here pictured on our scale, the Gini coefficient. And the way that works is it gives you a scale of 0 to 1, and if you were 0, that would mean that you had perfect income equality. That means everybody has exactly the same amount of money. And if you are 1 on this scale, that means that you have perfect inequality. That means that one person has all the money and all of the other people have no money. So the question is, where do people stand on the scale? The United States, if you're interested to know, is right in the middle, about 50. They rank 50 on the Gini coefficient. Silicon Valley started out in the 90s at about 35 on the Gini coefficient. We have now become 70. That's our ranking. That is we've grown by 40 percentage points, and it is the highest amount of income inequality in our nation. Now, let me put a few other details on that. Here's a chart that's making the main point of telling you that 15% or 16% of 16% of our households control 81% of all of the wealth. 16% of the households control 81% of the wealth. Then you take the bottom 50% of all of households, they control 2% of the wealth. Hope you caught all of that. So half of our households have 2% of the wealth. 16% of our households have 81% of the wealth, and that I hope dramatizes it for you. Now, a really important measure of people's health and well-being is simple. Are they housed? Do they have a roof over their heads? And so we want to say a quick word about what has happened on that score since the onset of the pandemic. So here is a chart that's showing you how many building permits we issued in Silicon Valley over the past 12 months. And the absolute number is 4,700. 4,700. That's how many new housing starts we approved. Ladies and gentlemen, that is the almost the lowest number in our history. It's beaten only by 2 other years. Last year, we approved 6,200. So that's a precipitous drop. In other words, we're not permitting the number of housing units that we need. And as a result, housing insecurity has skyrocketed since the pandemic. We estimate that 26% of households consider themselves insecure. By that, it means that they do not have confidence that they will be able to pay their mortgage or pay their rent in the coming month. And it's more in households that have children. Further on housing, this is a chart that shows you how we're coming in terms of providing the housing that's been allocated to us by the state. We've been given a target of housing that we're supposed to meet year by year. They call it the regional housing need allocation. And we're not meeting it. Just so you know, in Silicon Valley, we're not meeting it at all. In fact, the only kinds of houses that we're adding to our region to speak of are in the high income category. We have not added housing units that are affordable to our low income segments. In fact, the actual number is 700, believe it or not. So in the last calendar year, we permitted 700 units that would be categorized as affordable to the lowest earning quintiles in our population. So that's a pretty desperate picture. I'll also tell you something else that is obvious. It's been a year of tremendous need in terms of putting food on the table. And so we have seen the amount of meals distributed skyrocket in our region thanks to amazing work by cities, certainly by Second Harvest of Silicon Valley and other organizations. So we estimate that 30% of Silicon Valley households are what we call food insecure, and it's a higher number of households that have children. And meanwhile, the cost of food has risen over the past 12 months, and we're showing you just some random categories: meat, poultry, fish, and eggs. The price of those goods has actually increased by 17% over the past 12 months. Our mental health picture, not surprisingly, is a difficult one, and I think really the only thing we can say is what is intuitively apparent, and that's that people are suffering. This is a chart that's showing you how people in Silicon Valley feel. Do they feel anxiety? Do they feel depression on a daily basis? And back in April, you can see the green line representing Silicon Valley. We had about 8% of our population that self-identified that way. They self-identified as experiencing anxiety or depression. That number has climbed now to 18%, and it actually leads the nation and the state. It's also really interesting that the people that are self-identifying as anxious and depressed are young, actually the youngest among us. And it's also visiting disproportionately the women who are among us. So it's a sad chart. We take no joy in showing difficult things like this. I want to now ask the question, how has our region responded? What has the response been like? And you should know, if you don't already, that we live in a region that is characterized by generosity, by people who are very, very big-hearted. This is what it looks like if you total it all up. Over the past 12 months, we've generated about $94 million in relief funds. These are funds across at least 19 separate funds, including funds generated by private sector, by foundations, and by even by individuals who are deep-hearted. So 94 million across about 19 different funds. And the funds, the pie chart shows you how they were spent. And those funds were spent immediately, just so you know. They were raised and immediately deployed. And most of it went to basic food, shelter, and basic needs. But then it was also spread across other needy segments of our ecosystem, including small businesses and including nonprofits. You should also know that there have been heroic players doing unbelievably heroic things. For example, Destination Home. For example, Sacred Heart. And between the two of those organizations, there was 31 million generated. That 31 million was put against 14,000 households that almost surely would have been homeless were it not for their intervention. The response also includes the many ways that our region was able to rise up through Project Roomkey and Project Homekey. These are projects that have a combination of public and private funds, heavily weighted with public funds, which made it possible for Santa Clara County, San Mateo County, but also the cities within those two counties to acquire hotel rooms, to actually acquire hotels themselves, to make conversions, and to take as many as 16,000 households and put them into safe spaces. And that would include even isolation units for those households that had been infected by the virus. So it's a very impressive response that we think translates to as many as 150,000 collective hotel room nights. So that's how our region has responded to this crisis. Okay, now we're going to shift gears. We're going to talk about the other segment of the economy. So I have just described how the pandemic has had this devastating effect on our economy. But what I didn't make perfectly clear was that the effect has been completely uneven. For example, when we showed you those unemployment charts, I was quoting you an unemployment figure of 12% at its high. That doesn't really tell the story. Unemployment reached as high as 35% among the service sector and those more lower paid occupations. So it has had a very uneven effect. In fact, so uneven that I must now inform you that when the pandemic set in, the tech economy actually didn't miss a step. We, in a very short space of time, simply converted into home offices and sitting in front of our screens and being connected through the internet, and the tech economy just continued. In fact, Silicon Valley had a banner year. We had one of the most impressive years in our history. Let me see if I can illustrate that. Here, for example, is our stock market performance. That's a pretty good way to measure how we did. And sure enough, in the first few months of the pandemic, we saw that we lost ground on the stock market across all of the markets. But that lasted only a very short time. And then we made it all up. We lost about 2 trillion. Then over the rest of the year, we gained 5 trillion across all of the markets, including the most heavily weighted tech markets like Dow Jones and the others. So we ended with a market cap north of $10 trillion. It's more like $11 trillion. Imagine that. Remember, a market cap is the value of all of the shares times the number of shares. And so here's Silicon Valley just blowing through the roof in terms of market cap. We also had a banner year for venture capital. The highest year that we ever saw combined between San Francisco and Silicon Valley was it was in 2018, and we hit $50 billion. That's billion with a B. Well, guess what? We almost matched that in during the pandemic. We reached $46 billion, and Silicon Valley's share of that venture capital was the Silicon Valley's highest share in history. We achieved $26 billion in venture capital, and remember, that's capital generated here and being spent on Silicon Valley companies, startups, and so forth. Here's how it breaks down by industry, in case you're interested. And there's no surprises. Internet and healthcare are the big categories. However, I do want to signal one. One of the biggest newly emerging categories is transportation, because Silicon Valley is going crazy with autonomous vehicles and other forms of transportation. And so that's emerged as a big winner. I'd like to point out that most of the venture capital is going into the big mega deals, and I'm going to give you an example of those. In San Francisco, it's going to Airbnb, and it's going to DoorDash and Instacart. Those are San Francisco companies. No surprise there. In Silicon Valley, the mega deals, these are deals that are 100 million or more. It's going to Waymo, and it's going to which is an autonomous car company. And then it's also going into other tech companies like that. A quick word about unicorns. This is so amazing. In the United States, we have about 250 unicorns. Well, guess what? More than half of them are right here in Silicon Valley. Unicorns. And remember, unicorn companies are, when they are valued, they're private companies, not yet public, they are valued at more than $1 billion. And so we have more than half of the nation's unicorns right here. Then there's this new phenomenon, which is decacorns, because there's so many unicorns, it's become humdrum in Silicon Valley. So guess what? Decacorns are when you have $10 billion in terms of your valuation. There are 12 of those in the entire United States. 8 of them are in Silicon Valley. They are Silicon Valley companies. Do you know who they are? They're companies like Stripe in San Francisco. In Silicon Valley, it's Aurora, Robinhood, Roblox. These are the big decacorns. Quickly, let me tell you about the initial public offerings. It was a banner year for Silicon Valley that way. We had 24 IPOs, and we got better quarter by quarter. They were spread over a variety of industries. These are some of the companies that we witnessed going public: C3, Snowflake, McAfee, and others. I just want to point out that Silicon Valley's IPO companies had the highest return rates in the nation. The national average in terms of return was about 80%. But San Francisco and Silicon Valley companies had returns to their investors of more than 100%. In fact, it was 117%. So it's pretty amazing. Silicon Valley continues to fire in terms of its tech economy. We also had a record year for patents. That figure you see there, 21,466 patents, is the highest number that we have ever recorded in our history. San Jose is the nation's highest patent generating city. I'm quickly going to skip over this commercial development material and just tell you that the commercial development did not stop. It paused briefly while we figured out what we were doing. But then the industry figured out how to distance, how to introduce protocols, and with approvals from the oversight authorities, resume construction. And as a result, we actually completed as much commercial development space as we ever have in our history. In fact, if you combine all of the development that took place over the last 3 years, it exceeds all of the development that took place over the prior 15. That story actually continues. And none of the major projects have been scuttled. This, for example, we're showing you Google's plans for a major transit village in downtown San Jose, plans in Mountain View and elsewhere. Those have not been scuttled. They're going full force forward. Same with Facebook, same with other tech companies. In fact, of all of the commercial development that's happening out there, most of it is accounted for by 6 companies: Google, Apple, Facebook, Amazon, LinkedIn, Netflix. They are what's driving our commercial development. Well, let me just briefly point out that throughout the pandemic, somehow, paradoxically, we saw our home values increase. And so again, it's like Silicon Valley didn't miss a step. Median sale prices increased. The median sale price of a home was $1.2 million, again, the highest number that we've ever recorded. And our home values increased by about 5%. So again, I'm telling you, there's this amazing bifurcation. By the way, I'm showing you a picture of our state capitol, and that's because against everybody's expectations, California put together a $26 billion surplus. We were expecting a $54 billion shortfall. People were bracing for that. It didn't happen. Instead, Silicon Valley kept firing. We have a highly progressive income tax system in our state, which means that our state coffers continued taxing our high earners. In California, the people that are in the highest earning brackets make up fully 80% of state revenues, and they continue to earn. In fact, their earnings increased. So in California, we're actually looking at surpluses. Go figure, even though we're in the middle of a pandemic. Well, in the final minutes that I have, I want to set the scene for an important discussion that we'll be having in coming sessions, including the next session. I want to talk about race in Silicon Valley. I don't need to tell you that in the summertime, we experienced a long overdue racial reckoning in our nation, and it erupted into convulsions throughout the country. As we continue to confront what people call America's original sin. So when the the gruesome George Floyd incident happened, here's a map that's showing you how soon the demonstrations took place. And this is showing you that in California, within 48 hours, there were massive demonstrations in the streets of our cities. And in the Bay Area, we estimate that there were about 30,000 people who took to the streets for organized demonstrations and protests. That's about one out of every 300 people in the Bay Area. Well, to set the scene for the discussion that will follow, I simply want to lay out the facts about Silicon Valley's makeup and composition when we talk about race. We are not a majority population. Those years are long over. We used to be a white plurality population. That is no longer the case. The largest segment of our population is our Asian residents. They make up 35% of the population, followed by whites, 35, and then followed by our Latinx members, who are 25% of the population. Black residents make up 2% of Silicon Valley's population. We are the world's most globalized region. You won't find a population that is more diverse than ours. However, I want to make this point, and it's an important point. Even though our region's population is diverse, our neighborhoods are not. They are not. We have sorted ourselves into neighborhood, and this shows you by census tract what that looks like. Most census tracts are not diverse. They are characterized by 50%, 70%, even higher of one ethnicity. So we have sorted ourselves out, nevertheless. Here's a chart that shows you the progress that we're making by underrepresented segments of our population. And the progress is not enough. The chart is showing you that in our tech ecosystem, 45% of the workforce is our white residents, 43% would be our Asian residents, only 7% are Latinx, and only 4% are African American members. And leadership, it's even sadder. We have persistent disparities in terms of education, and there you have it on the screen. It brings us no pleasure to publish these figures, but our Latinx members of our population are not completing their bachelor's degrees. In many cases, are not completing high school. Here's per capita income by race and ethnicity. Also a very bleak picture. It shows our white residents with per capita incomes above $80,000, but it's showing our Latinx residents with incomes that are around less than $40,000, which I can tell you, you already know, is a poverty wage in our region. Here are the poverty and self-sufficiency figures. They are bleak. And they speak again of tremendous disparities and bifurcations. Fully 30% of our population, and growing, is categorized as not self-sufficient, living in poverty, not certain where the next meal is coming from, and then the picture is even more sad and even more telling when we break it out by ethnicity of the households. So these are sad things. The saddest chart of all is that the disease has not visited us equally. The white members of our population are contracting the disease at far lower rates. This is showing you the daily case counts, the average daily case counts. And so if you are white, the average daily case count will be 6. But if you are Latinx, then the daily case count will be 26. It's almost 4 times, more than 4 times the average of the white and Asian members of our population. It's really sad. Ladies and gentlemen, I'm out of time, so we're not going to talk about the rest of these slides. The biggest question that we've been asked this year is if Silicon Valley is losing people and if we're losing companies. And we'll speak to that in future sessions. The answer is it's too soon to tell. By the head count, we're not losing droves of companies. We're actually losing companies that you can count on the fingers of one hand. And that we continue to be one of the top tech talent centers in the nation, even though our tech companies are also investing in other parts of the country. So that's just a quick, really quick answer to the question that we are asked most of all. So now I'm completely out of time. I just want to remind you that all of this information lives not only in a booklet, but it lives on a website, and you can delve into all of the indicators on this website. It's siliconvalleyindicators.org. The website has real-time dashboards. You can look at what is happening by the minute, and it's continuously refreshed. So we make all of this information freely available to the community because It needs to be in our hands, in your hands, as we think about our future. Let me conclude by simply saying this. I think that the pandemic has revealed a lot of things about us. It has certainly revealed our fragility. It's certainly revealed our interconnectedness. Our hope at Joint Venture Silicon Valley is that we will come to understand this better than we ever have before, in deeper and ways that are completely new to us. The pandemic has also shown, sadly, that we weren't ready, that we were not ready for a low probability event, a low probability but high stakes event. We weren't ready. So our hope is that we can use this as valuable learning so that our region will be ready when there are high probability events assailing us, like, for example, a climate crisis. The coming years, I do not believe, will feature a return to normal. I think we're going to have to get used to things like this being our new normal. And so the question is, will we rise to those kinds of challenges? We don't get to choose the challenges that we face, but we do get to choose how we respond to those challenges. And so our hope is that Silicon Valley will continue to be resilient, smart, thoughtful, compassionate, and inventing the future of America's metropolitan regions. Thank you, ladies and gentlemen. That concludes my presentation of the 2021 index.